especially financing to qualified buyers for 60 months.
Can everybody see my screen pretty well? Does it look good?
Except for that
being
recorded thing in the middle.
No, it looks great.
Okay. Okay, so like she said, my name's Dakota Moore. I'm with the Kentucky Horticulture Council. We have a bunch of different programs all over the state. We'll do water testing. We've got a small fruits initiative. If you're looking at getting into growing small fruits, that's most your berries. If you've got some peaches that are about dime size, that's not a small fruit. I'm sorry, I can't help you there. But if you want to grow some berries, I can get you some technical assistance and even some maybe some financial assistance. But today I'm going to talk about crop insurance. So over the past few months, I've been able to speak with a lot of growers and host a webinar series on crop insurance. I myself have never had crop insurance, so I'm learning along with everybody else. So I don't have all the answers, but I've been trying to decipher some stuff. So hopefully I've come up with some stuff that will be a good fit for veterans. There's some different programs and policies that have some benefits for veterans. Okay. So why should you consider crop insurance? Well, some people might need it because of a loan. Either you have to have it for your loan, or you need to have proof that you've had crop insurance before to get a specific loan. Or do you need it to protect your investment in your farm? So if your farm is your main source of income, you're going to want to protect that. You're going to want to protect either your yield coming in or your revenue, your source of income. Because if you were to lose that, your family might face some hard times. So today I'm going to talk about some risk management agency policies. So they are a part of the USDA. They create crop insurance policies, and they're the ones that give you the payments if you do have a loss. Then the FSA, I'm going to go over some of the Farm Service Agency programs and talk about the benefits for veterans for those two specific programs. For the RMA policies, I'll quickly go over those policies, and then I'll talk about the benefits, because it's more of a benefits for all the agencies' policies versus different like the FSA. So like I said, the risk management agency, they create the whole farm, or I'm sorry, they create the crop insurance products. So this includes multi-peril crop insurance, whole farm revenue protection, and a new micro farm policy that we'll talk about. So multi-peril crop insurance, this is best for growers with a single commodity. So this is, you don't have to be growing just one commodity, but it's usually for people that are growing large amounts of just a couple commodities. So a lot of row croppers are just growing, corn, or just growing tobacco. Beef producers, most of the time, they're just raising cattle. So this is single commodities, and these are subsidized by the RMA, and this protects against a loss of yield. And sorry if I'm going a little fast. I've got a lot to cover. If you'd like some more in-depth, I'd be glad to meet with you or answer any of your questions. But I just want to give an overview today. So the multi-peril crop insurance protects you against natural perils, living threats, and then some things that are kind of outside of those. So natural perils, that's weather events, flood, tornado, blizzard, fire, so forest fire, and then also volcanic eruption. I doubt we would ever have a volcano erupt here in Kentucky, but if there were one that erupted large enough to throw smog into the atmosphere and that somehow affected our crops, you would be covered. I'm going to check the chat real quick. Okay, yeah, so drop your questions and I will answer them at the end. So living threats, that's insects and disease, but only if the proper control measures were used and they weren't enough. So if you didn't, spray, practice any integrated pest management methods, if you just set your plants out and walked away, and then you came back and said, "Oh, all the bugs ate my corn," they would say, "Sorry, you didn't spray, you didn't apply IPM." So that means you have to keep a record of, any methods you use to combat disease, pathogens, anything like that. So you can prove, hey, I tried it, but it still wasn't enough. And then also failure of water supply for irrigation. So, that might be considered an after effect of a drought or some other event that prevents the water you use to irrigate from getting to your crops. Also prevented planting. That could be caused by many different weather events or natural perils. If you aren't able to set your plants out for several weeks, maybe even a month, you might have a decrease in yield. And then also losses in revenue due to a price change. So especially if you're growing row crops or livestock, sometimes those prices can tend to be pretty volatile. So if your price were to drastically decrease, you might be able to get file a claim on the insurance for that. So the multi-peril crop insurance coverage varies by crop and by county. So things like row crops, those are going to be pretty available in Kentucky. It's the specialty crops, your horticulture crops that you might not have coverage in your county. So this is a single crop plan. So each county has to have its own plan for each crop. For example, peaches. That's probably the most counties covered in Kentucky, and it's still only a handful. But that's just due to demand for these policies. They do add new crops and new counties every year. So if your crop isn't covered, you can apply to hopefully get coverage for your county. And then, like I said, if you grow more than one crop, you'll need separate policies for each crop. Next is the whole farm revenue protection. When I talk to horticulture growers, this is the plan that I think would work best for them. It's best for diversified farms because it lumps everything in your farm under one policy. Whether you're growing some tomatoes, peppers, and watermelon, and also you sell eggs from your chickens and your ducks, that would all be considered your whole farm revenue. It's available in every county. So that's the kicker here. If you have a crop insurance agent tell you that your crops or your anything you're doing on your farm is not covered by crop insurance, they are lying to you. I've found a lot of agents, the whole farm revenue protection plans do take a little bit more time to write and create compared to some of those multi-peril policies we just talked about, especially your row crops. You could walk in and say, I've got 100 acres in soybeans. You could walk out in 20 minutes with a coverage. With the whole farm, it's going to take a little time with you and the agent working through your farm to get the protection you need. So a lot of them don't want to be bothered with that. So they'll tell you no. That's a red flag that you shouldn't want to use that agent. But don't be discouraged if someone tells you that. And so the whole farm revenue protection also provides protection against a loss in revenue. This does not look at yield. So that's why it's great for diversified farms. You don't have to keep up with, oh, my tomatoes did this, my pumpkins did this, my eggs didn't sell very well this year. That's what you're looking for is your revenue, not your yield. So maybe your chickens didn't lay as many eggs. That doesn't matter. If you didn't make as much money because of it, that's what matters. It looks at your Schedule F, which is a tax document most of you should be filling out if you are making money from a farm. So that just checks or tracks your revenue and expenses on your farm. And so they take that and they use that to make your policy. So what are you protected against with the whole farm? That's the adverse weather, just like the previous plan, natural causes, so earthquakes, insect infestation due to weather, and then also that loss of a price or a market. So this one is special. It protects you against a loss in market. So a lot of diversified farmers are selling at farmers markets. So if you sold at one that made up a large chunk of your revenue and that market closed for reason, you might have trouble selling some of your produce or some of the things you're growing. So this plan would protect you against the loss of that market. Some things that aren't eligible would be not following good farming practices. So if you're just a bad farmer, they're not going to give you any money because you lost revenue because you didn't take care of your crops. So things like weeds, if you're not going to, try to take care of your weeds, that doesn't mean you can apply for a claim. You should have been out there. You should have been weeding. Things like animal damage, that one is a little hard, but they're treating it like insects. You should be taking those control measures to keep the animals out as well as the insects. And then this one is kind of odd and gets people, a little upset. Why am I not protected against human damage? But the RMA doesn't see that as an insurable cause of loss. So if your neighbor does donuts in your field, someone throws a cigarette out the window as they're driving down the road and it sets some of your crops on fire, I'm sorry, but you wouldn't be protected. It's awful, and I hope that doesn't happen to anybody, but it's not, you can't get protection. Real quick, I've got a premium example. I just want to show y'all what the subsidy that the federal government has for your premium. So let's say you wanted 75% coverage and you had about $90,000 in revenue. So with that 75% coverage, you're choosing to insure your revenue all the way down to $73,000. So if your revenue dropped below that, then you would start to receive a payment. So that means at least you will earn $73,000 that year. Your premium would be $6,800. So that's kind of a lot compared to what your annual revenue is. Excuse me. But the government subsidy covers $5,400 of that premium. So all you're paying is $1,300. So that's a big deal. So, to insure at least $70,000 of revenue, you would only be paying about $1,300. So this was an example. It would be different depending on, how much you're earning and which plan you choose, but this can just show you how much the government is going to subsidize. We will talk about this again when we get down to the veteran benefits, because there is a 10% increase that subsidy. So you would be paying even less premium. Next is the whole farm revenue micro farm policy. So this is brand new this year, and it's for diversified farms with revenue under $100,000. This is for it's specially designed for direct marketing farms. So growers selling to farmers markets, selling from on-farm stands, selling online, through whatever website they choose, and even some subscription services. This would not cover CSAs, but it's for anyone earning less than $100,000 in approved revenue. So that fits a lot of horticulture growers, a lot of specialty crop growers fall into this category. And then I do have a note, if you Next year, so if you had it this year, if you applied for it next year and your revenue had gone up, but not over $125,000, you would be grandfathered in. So you'd be allowed to keep this one again this year, and then the next year you would move on up to the regular whole farm revenue. So that makes this policy kind of just a stepping stone. It's an easier way to get into crop insurance because there's a lot less reporting. So you don't need your expenses, you don't need individual crop commodity prices and yields. So all you really need is at least 3 years of past revenue records from your tax documents, and then you can apply for this policy. So it makes it a whole lot easier. It makes the paperwork a lot less daunting. And a lot less scary too. And it's also designed to help get agents used to a whole farm revenue protection plan. It's less records and less paperwork for them as well. So it's kind of an introductory for farmers to get into whole farm revenue, and also agents to get crop insurance agents to get into whole farm revenue. The commodities that are covered under this micro farm policy, it covers a ton. So it covers any fruit, vegetables, plants, flowers, anything that you're growing or producing on your farm, livestock and dairy as well. It also includes value-added products. So if you're canning or freezing, pickling, I'm not sure about the meat side, but I assume there's a few things you can do with that. So if you're creating value-added products, that's covered under your farm operation. If you're doing any processing activities and getting paid for it, so say you wash produce for other growers, or maybe you've got a kiln that you dry potatoes in. If you dry for other people and they pay you, that's considered your farm revenue. So anything like that can be included as well. And then this is the big thing for some of these direct market farmers is commodities you buy for resale. So maybe you have to buy in a few tomatoes every now and then. That is still considered your revenue, and you're not looking at the expense of that. So that just adds to your revenue. So as long as it's no more than 50% of total revenue, then you should be good. I will take the questions at the end, just so I make sure I'm staying on time and doing okay, and that we'll go back through those at the end. So what is not considered revenue under this micro farm policy? So things like timber, forest, and forest products, those aren't covered under many of these crop insurance policies we're talking about. Those kind of have their own special sort of deal, but I don't know many producers on the small scale that are doing things like that right now. So animals for sport, show, and pets, those aren't allowed. So if you're raising deer for people to hunt, that doesn't count. Like breeding dogs, that wouldn't count. And then gift or souvenir sales. I know a lot of farm stands or farm stores have things like, gardening supplies, t-shirts, and then also things like water bottles or, maybe some already processed foods. Those wouldn't count because you're not creating those on your farm. So all of these 3 points we just talked about from the Risk Management Association, there are some benefits for veterans. Veterans are exempt from paying the administrative fee for some of these policies. So the money it takes to process some of these fees is waived for veterans. Also, that additional 10% premium subsidy for some of these policies is there as well. So that really decreases the amount that you are paying to insure a large chunk of either your yield or your revenue. Also, veterans have the ability to use another person's production history for the same acreage that they're trying to insure. I assume this was made for those veterans that are getting out of service, going back to their family farms, and maybe taking over from their parents. So you do have to have previously worked that land and helped make management decisions. So that means, you helped your parents while you were growing up, or you worked there when you could, and you helped them decide the direction of their farm. If you're taking that over, either you bought it or they gifted it to you, whatever, you can then apply for crop insurance using their production history. So you don't have to wait 3 years to use your own tax records. You would be able to use theirs. And that's a big deal. Especially some growers would have to wait 3 years before they could apply for crop insurance. And then also there's an increase in some of the yields adjustments. And that would be like a multi-peril crop insurance policy. And I do want to note, these are the same benefits as a farmer who qualifies for beginning farmers or ranchers, but the qualifications are a little different. So if you also fall into beginning farmer, you would have the same benefits as this, but the qualifications would be different. There are some caveats with this, though. So you're only eligible to apply for these veteran benefits if you have operated or managed a farm or ranch for less than 5 years, or have been discharged from active duty in the last 5 years. So their thinking is, if whether you're a veteran or not, if you've been farming for more than 5 years, you either should already have crop insurance, or if you don't already have crop insurance, you probably aren't very interested. So they aren't going to give you those benefits, which in my mind doesn't make sense, but they have some reason for it. But that's how it is. But the benefits, if you do apply and you qualify, the benefits are continuous until you've operated a farm for 5 years, or until 5 years have elapsed since you first obtained status as a veteran. So if you're recently out of service, then you could potentially have this for several years, have these benefits of these policies. And quickly, we'll go through the Farm Service Agency programs. These are NAP and TAP, some helpful acronyms for some longer name programs. So the first one is Non-Insured Crop Disaster Assistance Program. And that's why that's short. So this is for individual crops, like the multi-peril crop insurance we talked about first. This is just financial assistance to growers of any crop with no available crop insurance. So if you don't have a multi-peril crop insurance policy in your county for your crop, this is why you would do the NAP program. And this protects against the same disaster or weather events, natural events of the other plans, but this does not include any price protection or market protection. This is solely disaster. So why would you choose NAP? So NAP is great for farmers that are smaller and limited resource growers with fewer commodities. If you've got a ton of commodities, you might want to look at the whole farm revenue because you want to just combine all of that together. But the NAP does have probably the best veteran benefits of any of these policies. There's a waiver of a service fee, and that one is like $380 per crop. So if you had multiple crops that or commodities, that would add up pretty quickly. And you have a 50% premium reduction. So that is the huge deal right there. So you're automatically, if you're a veteran, cutting your premium in half. And to best of my knowledge, that does not end. So after you have this for years and years, I think you can continue having that premium reduction. The same reduction and waiver of the service fee is also available for beginning growers, limited resource, and socially disadvantaged farmers. So the crops that are eligible under NAP are any crops grown for food consumption, livestock consumption, grain or forage, and then fibers. So people growing cotton or even hemp, that would fall under fiber, or maybe even food. So crops grown in controlled environments. So that's ornamental plants, cut flowers, mushrooms, anything in a high tunnel would be considered that as well. And then some random things they lump in here: honey, maple sap, sorghum, any aquaculture. That's the only animal component to NAP, is the fish with the aquaculture. And then Christmas trees and sod as well. Pretty unique to have sod covered, but NAP does cover sod. And so there are several different coverages you can choose from with NAP. The basic coverage is a 50% of you're insuring 50% of your yields at 55% of the price. So if you lost 100% of your crop, you would get back 27.5% of the crop value. So maybe that's enough just to buy seed next year. It's not a whole lot, but the basic coverage only has the service fee. So if you are a veteran and you choose this, it would be a free plan for you. So just in case, you ever lost 100% of your crop, you would get back at least 27.5% of the crop for no cost to you. The buy-up coverage does go from 50% to 65% of yields, but that's always at 100% of the price. So if you had 65% coverage and you lost 100% of your crops, you would get 65% of your crop value as payment, which is a pretty big deal. I mean, that will cover your planting costs for sure, maybe even some of your other input costs. And with as a veteran, you would get a 50% reduction in that premium. I can't tell you the premiums because the premiums with NAP are very operation based. So they would look at what you're planting, how many acres you're planting, things like that. So they would look at your specific operation before they could tell you a premium. But as a veteran, you're already getting for 50% of that reduced. So that really opens you up to those higher levels in coverage, knowing you'll be paying half the price and no service fee as well. If you are an organic or you have a direct market price for your crop you're trying to cover with NAP, they will let you choose that if that average organic or average direct market price exists. So I know organic prices are usually a lot higher than conventional methods, so you want to be paid at that organic price. And then we've got, if you've got contract prices, you can insure or use that price for your NAP coverage as well. So if you're selling to places like schools or hospitals, you might want to use that contract price to make sure you get protected for that. Real quickly, the applicants for NAP have passed. The last of it is tomorrow, so it's past business day, so all these have passed, but it's good to be thinking towards next year. You've got a few months to be thinking about crop insurance, so just keep your eyes open and start doing some research about which policy or program you think works best for you. If you're growing strawberries, that NAP deadline is usually September 1st. So that would be your first deadline that's approaching. Lastly, I'll cover the Tree Assistance Program, or TAP, and this is for nursery tree and orchard crops. This one I just want to cover because it's kind of timely, especially here in Kentucky. In December, we had those tornadoes. I'm over here in Western Kentucky in Murray, so not far from Mayfield, which was just devastated by that tornado. And there were several other places in Kentucky that have been hit last year. And so this program is for you to think about if a disaster ever occurs to you. So it's available to nursery tree growers and orchardists only, and it's financial assistance to replant trees, bushes, and vines that are lost to natural disaster or plant disease that comes from that disaster. The trees that are covered are ornamental, fruit, nut, and Christmas trees. So that's not timber trees. These are trees that you're growing to either sell the trees or bushes themselves, or you're selling the fruit and nuts that they produce. So you have to be selling either the plants or the produce to be covered for this. It's not gonna cover just, I've got a cherry tree out back that I pick from in the summer, but I don't sell anything. That's not what this is for. This is for, orchards or nurseries. But the trees can be grown on owned or rented land, which is a pretty big deal for nurseries because a lot of nurseries either don't own their land or they also grow on some rented land at their store. So when do you apply for TAP? You only apply for this when you have damage or loss. So that's why this is kind of timely. You don't have to apply for this beforehand. You just need to remember this in case you ever have a disaster. I hope no one ever has a disaster, but if you have anything covered by this program, just keep it in the back of your mind if there's ever a bad storm or tornado or even flooding, whatever. And you have up to 90 days after the disaster to apply. So this isn't something you have to like, oh, I just lost everything, I have to apply in a week. No, you've got 90 days. So the tornado happened on December 10th. And so they could have applied until last Thursday. I just looked at the calendar. Last Thursday, they had 90 days to apply for this. The TAP payments is where the veteran benefits come in. So established growers or non-veteran growers, they would receive either 65% of the cost to replant or 50% of the cost to rehabilitate their trees or bushes. Veteran growers and beginning growers would receive 75% of replanting cost or 75% of the cost of rehabilitation. So you're automatically getting at least 10% more, or if they chose the rehabilitation route, you would get 15% more, or I'm sorry, 25% more. So that's not as big benefits as the NAP, but if you're ever in a disaster situation, you could receive more than some of the other growers. So to wrap up, when should you start thinking about crop insurance? Like I mentioned, a lot of the deadlines in tomorrow. So for those whole farm revenue protection, the micro farm policies, if you wanted those, it's a little late now, but you can start that process now. Find you an agent that is going to work with you to create those whole farm revenue plans. You don't want to wait. You want to find an agent, as soon as possible. Maybe give them a week or two because they're wrapping up, finishing all these for this year. But you want to start finding one, and you can use the USDA RMA's online agent locator tool. So this you would put in, your crops, your state, and your county, and it'll help you find some agents that cover your county. And with crop insurance agents, they don't have to be in your state to cover you. This can be a good thing, especially if you're growing something that's not too common or you're looking for that whole farm revenue plan. You can find an agent that covers Kentucky, but they don't have to live here. So, other states may have more experience with the whole farm plans. So you'll want to try to find one that will, cover you. That tool does give you a long list, and it can be a little overwhelming. But just find someone that looks, covers your county and give them a call and start the process. And I mentioned the NAP deadline varies by the crop, but most of them have passed. For this year, all of them have passed. So you'll be looking ahead towards next year. I do have another webinar coming up on April 10th or April 12th, I'm sorry. And that will be a grower panel. Hopefully we'll have some growers that have experience with crop insurance and have bought some before. So if you've got any questions, you can email those to me and we'll get them asked to the growers. But at the end of this month, on the 29th, I'll be posting a video I'll record talking about NAP more in depth than today. And we'll also go over the rainfall index, which is something if you're growing hay, honey, or pasture, so pasture or forage for grazing, that's a program that can help protect you against drought or lack of rain. And we'll be talking about that in a video at the end of the month. I do want to plug 2 surveys I have. I can send you the link to the surveys if you'd like, or you can scan these codes on your screen. This helps us set a pricing database for NAP to use when Kentucky growers file a claim. So if you were growing peaches in Kentucky and you had to, you had some loss, a disaster caused loss, and when it came time for your payment, you might have to use national peach prices, which would not be very good for you because more than likely those national prices skew lower than what the price would be if you sold it in Kentucky. So I've got one for fruit and one for vegetable. You don't have to have had NAP coverage, or if you don't even plan to have any crop insurance, if you wouldn't mind helping us set up this pricing database, we can help Kentucky growers get a fair price. And it's anonymous, so I'm not going to turn you in for, underselling your corn or whatever. I'm not going to publish a list saying, no, so-and-so sells his watermelon for this price. This is only to help growers get a fair price. And there's my contact information if you've got any questions that you don't want to ask today or anything you think of later. I'll look through the chat right now and try to answer some of the questions. Okay, so David said, when I had tobacco and had crop insurance and a hailstorm, you received $0. So that's very confusing. Yes, that is. Hail is one of the tricky things. So I know Whole Farm Revenue Protection has some hail protection. And then I think NAP does as well, but the multi-peril crop insurance does not cover hail, which is a little confusing for people. But there are private crop insurance companies that sell, private plans that are specifically for hail. I don't know how they expect you to protect yourself against hail, but for some reason they don't cover it. But if you're growing something that you do have a fear of hail damage, you might look into a private insurance plan that is specific for hail. Okay, I will send you some links to that information. I can try to drop some in the chat in a minute. Oh, I passed one, sorry. So if they tell us they don't, should we call them out and demand service or seek another source? My opinion, I would, first reaction, you want to call them out and demand service. But when you think about it, if they already told you that, they might be a little difficult to work with, and it might be best to find someone else. When I choose someone that I'm going to work with for whatever reason, I want to choose someone that I think I can have a good rapport with or get along well with. But if someone flat out told me no right away, when they know that there is a possibility to get me coverage, I'm going to stay away from them. Okay, and then if they tell us they don't, past tax documents have to validate a relative revenue history of stability. So meaning if your past revenue was only $25,000, there's not going to entertain the $10,000 policy or $100,000 policy. So a lot of these plans do take into account expected growth. So if you can prove that you have had steady growth over the past few years, they might insure, what you might expect to do the next year. So say you started out earning about $50,000 and you protected that with a policy. But each year you tend to grow about 8,000 or so, and you're getting on close to, you project next year to be about 75,000. They'll look at your past tax documents and say, yes, you've had increased growth, or maybe you just purchased some more land, or for whatever reason, you can prove, yeah, I'm probably going to have growth this year unless something crazy happens. They'll let you insure for that expected growth revenue, which is fairly nice. They're not saying, oh, you have to stick to what you've done in the past. They don't look at your past 3 years and average it. They do, but if you are expected to increase growth, they will work with you on that. Yes. So Cindy, she did put those surveys in the chat for you for the fruit and the vegetables. Okay, David, this was a private company. Yeah, I'm not sure about that. Maybe that was one of the stipulations you weren't protected against. I don't know their deciding factors, but I know for a fact that Whole Farm Revenue and NAP do protect against hail. And so where can I find more info about rainfall index or the pasture raise? I will try to send you some of that. I'll drop it in the chat once I finish up. But real quickly on that rainfall index. So specifically, you pick 2 months, 2 consecutive months. So that can be, February, March, or July and August, that you think we might have less rain than normal. And they've got, past weather data and what's expected. So you can choose, if it drops below a certain percent of rainfall, during this time, you'll get payment. So it's a way to protect yourself in case there's a decrease in rain. And that's only for pasture, rangeland, hay, and honey, things that are greatly affected by lack of rain and things that are very hard to irrigate for. But I'll try to find you a PDF I can drop in the chat real quick if there's no more questions.
I have a question, but it's unrelated to the crop insurance. It's related to the water testing.
Sure.